And we would sort of caution that people should be a little bit hesitant to believe that, and we'll go through why. But before we do, it behoves me to say that as it stands right now, Australia's residential real estate absolutely underpins the wealth of this nation. At roughly $4.86 trillion in value, it's basically 3 times the size of our superannuation pool, 3 times the size of our stock market, essentially 3 times the size of our national economy as it stands. Now, in case everyone thinks, well, so what, is that a normal figure? Compared to our OECD or our Anglosphere cousins, the answer is no. If you look at, fine, the UK, it's pretty high, it's about 2.82, the ratio between the value of their housing assets and their GDP. But if you look at the United States, which obviously had a huge house price boom, a correction, and now it's going back up again, or at least it has been lately, you can see that their housing market's only worth about $18 trillion. It's barely that much larger than 1 year of annual output. So we have already, as it stands today, an absolutely enormous amount of our wealth and an enormous amount of investment in residential real estate. In terms of the state of the market where it is now and over the last 12 months to June 2013, you can see that national home prices rose about 5%, which is a pretty decent number. But it was quite a disparate set of results. Perth was booming, it went up 11%. Darwin was booming as well, so about 8%. And Sydney and New South Wales did really well, up about 6% as well. So they're all great figures, but that's only about where 40-45% of the population lives. So if you look at Queensland, South Australia, Tasmania, etc., even Victoria, most of these states saw house price appreciation at best around the rate of inflation. So hardly booming there for all of those people. And it really shouldn't surprise us that despite rates being at record lows, we're not necessarily going to see a house price boom this time around, because according to this chart, which was produced by AMP Capital, you can actually see that the value of our housing market is considerably more elevated today than what every other major nation, much higher than the value of UK housing, much higher than US. And of course, they've gone through serious corrections. We've never had a serious correction in this nation, which makes some people think that we never will. But that's exactly what those countries were thinking 5 years ago before their housing markets suffered a very, very, very serious fall. So the idea that we're going to see house price growth of 10% per annum year after year after year for the next 5 to 6 years, when valuations are already so extreme relative to incomes and relative to rents, is something that, again, we should be treating with appropriate suspicion. Despite that, though, there are no shortage of people that will tell you that there is nothing but upside ahead for housing, and they'll quote 3 major reasons. They'll say that overseas buyers are going to snap up property. They'll say low interest rates will spur demand, and they'll claim that we have a housing shortage. Now, if you think about overseas buyers, yes, there has been growth in that market. Yes, there is potential for it to grow further. But the majority of that buying is concentrated in newly built apartments, newly built houses. So it actually adds to the supply side of housing as well. So it's not necessarily the panacea to push prices considerably higher in the future. And not only that, with the risk of a falling Australian dollar, there's a fair chance that many foreign investors will think, you know what, maybe I'll just hold fire for a while because I don't want to go in and buy Australian housing now and potentially take a 15, 20, 30% haircut on the currency, which happened during the GFC, for example. So it will be a source of demand, but the idea that overseas buying alone is going to cause property prices to fly from here is probably not accurate. In terms of that second one, though, the fact that low interest rates will spur demand, obviously low interest rates definitely help improve mortgage serviceability. But I think this chart helps explain why it might not see house prices boom too much more. Because if you look all the way back to the early 1990s, that there is the standard variable mortgage rate. You can see back then, I'm sure there's many people in the room that would remember, people were having to pay 16, 17% to borrow to buy a house back then. And it's been falling all the way now to the point where you can get a mortgage for well under 6%. Despite that though, this blue line shows the average amount of money that Australians are having to spend, the percentage of their disposable income, to meet their mortgage repayments. And as you can see,